During the bull market, one project caught a lot of praise for its innovative model and its mobilization of game theory, Olympus. The project's stated aim was and still is to become the decentralized stablecoin of Defi, and one of its big innovations was the way that it used bonding to own its own liquidity. Olympus Pro, its bonding marketplace, helped secure liquidity for protocols across the Defi space too. But perhaps its most popular feature, for investors at least, was its 3-3 rebasing, which saw huge yields paid to investors who locked away their investments for long periods of time and didn't sell. And in typical crypto fashion, this spurred on countless copycats who often came to the market with insane amounts of yield. But as the bear market started to grip markets, these projects were the first to be dumped, as investors sought safe haven in stablecoins and blue chips. And Olympus, perhaps unfairly, suffered a similar fate. The project, which at one point was trading at around $1,400 a token, finds itself trading at $19. But in recent weeks, the project has proven itself to be quite resilient, outperforming blue chip peers like Bitcoin and Ethereum. Looking back at the timeline, the heaviest selling occurred at a key moment for the company, when it was updating the smart contract that underpins its tokens. This spurred one commentator to note the similarities with the way that Luna was attacked recently, highlighting the key difference in that Olympus survived its attempted hit. So we think on balance that it's probably worth having a fresh look at Olympus. Despite everything, its APY is still around 400%. Narrative-wise, it's hard to imagine how things could be worse than the 6 months just passed. And you'd think that anyone who is inclined to sell would have done so by now. At face value, the risk looks good right now, but always do your due diligence and make managing risk your priority.